Thursday, the 24th of March, 2016. Thanks for joining me. This is the last trading day of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the early sentiment. Crude is down a fair amount. It's down almost 3%, trading at 38.60 on the May contract. The European indices are down as well. Euro Stoxx 1.82% and DAX 1.54%, with the S&P following on its heels at 0.7%. The S&P is down 14 and a quarter points. We'll go over that in a bit. Gold also taking a hit. Was down as far as $1,211, trading $1,220 right now. It's down 0.3%, and pretty much everything that's up is the safety, our safety commodities, the Japanese yen, the U.S. dollar index, the Euro Bund, and the U.S. Treasury bond are all up currently. Let's take a look at what we have on deck today. We did get the initial claims number. It came in at 265,000 versus 269,000, slightly better. Durable goods came in at negative 2.8 versus negative 3.0, also slightly better. Fed's Bullard came in earlier and said the next rate hike might not be far off if economy grows as expected. Just probably spooking a few people with that. Remember, yesterday I announced that there's some dissent in the Fed. 4 out of the 17 Fed presidents disagree with the guidance provided by the FOMC, thinking that it was far too dovish. Let's take a look at what we got yesterday. And of course, we start with the review of what was expected versus what had happened. This is your primary hypo here for the day. As I said yesterday, it's been opposite day all week and continued to be so yesterday. Yesterday, we were looking for, because we're in this three-day balance, I'll invite you to watch this video if you want. We were in this 3-day balance, and we expected the market to go back up to 2040 quarter at some point. The expectation is it would push the overnight low and start to drive up on a primary hypothesis. The secondary hypothesis is it opens and drives right through the value area to the other side, cutting into this MCLVN up on the, which is at the overnight high. The tertiary hypothesis number 3, is the one that did work out almost completely exactly. You can see here the turn at 38 against the closing swing low, 38 quarter. The expectation is a noisy open, a push to 38, and a rotation to 2026. The number really is 2026.75. And yesterday, that's exactly what happened. Here it is, 38.5 versus 38.25 on the high, and 25.25 on the low versus 2026. Worked out almost exactly. I can't say I took tremendous advantage of it. Just one, let me see, I'll show you this. Just one trade, really. I was looking to trade this, trade against this impulsive move down, this rotation down, and I was looking for an area to get short down into the break lower. Could not find a spot in here. Ended up finding a spot in here, but took a lot of heat on this setup. This is the entry right here. There's the entry short. This is the area I put down for my hard stop above this liquidity that's available up here. By the way, this software is called S5 Bookmap. It's advanced to the point that I completely execute on it now. So you see the short triggering here, lots and lots and lots of heat. The market came within a tick of taking me out, and then it finally fell. I front ran The liquidity that was down here, down into the 26. I front ran it down here, and then the market dropped down to 20, 25 and a quarter, and then the rest of them I got out as the market came to the close. Just one trade, but that's how tight it was. I did say yesterday that the best opportunity is for this to rotate to 2026, and we got that. The reason I said that is because it pushes us out of the 3-day balance. Let's look at the 3-day balance again. There we go. So the 3-day balance was right here. So it pushes us out of the 3-day balance zone and then breaks us into this thin zone that's down here. And that's what we're trading for right here, a single print on the market profile. I know I'm flipping a lot of charts here at you, but the target was this single print area. The next area down was 1975 on the day session, and below that we have a major level of 1575 if you recall. Here we go. I know I'm flipping through these charts fast. So this is the composite from the 24th. There's a new feature here in IRT where I can constrain which levels it shows it through. So I just have it constrained to this area, and you can see right here is this key low volume node right at 1575. That was the next area down. So 19 just above and 1575 are the key areas below the 2026, and that's what I was looking for yesterday. I was looking for it to drop through and give us an opportunity at 1575, which happened in the overnight session. And then guess what's next? The next key area is the 2650, which was 2005. But the key area is, for those who have been paying attention, is the 1995. The 1995 is a big one. Would love to see it pull back down there, form a base, and give the buyers a chance to hop on at much better prices. So if we review back where we were and where we got that 1995 from, here's where it comes from right here. It was resistance, pull back, gap up, test down, push up higher, gap down, test to it, push up, attempt, and the break higher last Thursday, and we have not seen these prices since. So ideally, the rotation would continue lower. We do have a decent sized gap. You could see that the overnight high was right up against the closing swing high. It was unable to test or breach that 2030 again yesterday. Was unable to pull back and test that area once it broke into the 2025, showing a lot of weakness. So the expectation is for it to rotate down to 2015.75, and it did in the overnight session. I want to remind you also, news that came out of China. China has banned a short selling on its brokerages since that big correction on the in August, and it has now allowed the market to sell short. So we're looking for some volatility as players in that market look to take advantage of the bad news there. Although a lot of the bad news has already been accounted for. So that's how things are setting up. The overnight session is strictly down, a very clear trend. There's no balance in the overnight session, a very thin multi-HVN profile. We do have a big gap to account for. The gap statistic, what was it? It was at 13 this morning, and right now it's at 14. The raw gap statistic is that given 1,400 days of data, there's a 24% chance that the gap will be closed. Yesterday's gap would be closed today, 24%. So that's how things are shaping up. Given where we are and how we're doing, the market is pushing into the key LVN area. So what we've done essentially in the big picture, we have moved away from this high volume node right here, okay? And we have started to move into and cleared this low volume node. So we're in a very turbulent area here, what could potentially be a very turbulent area here. A two-way fight is likely to ensue if the sellers dominate and keep the market below the 1575. In other words, if we open, attempt higher, and then find sellers and then end up taking the opening swing low out, then I'm looking for 2,650 on the primary hypothesis, but the key goal here is 1996, 1996, 1995 area is the key target below, and that would be wishful thinking probably, but my primary hypothesis so far this week, the primary hypothesis has failed every day. The second hypothesis has won 2 days, and the third hypothesis has won yesterday. So overall, the market is really jarred. It is not following what I would expect to be the opening auction behavior that we've seen traditionally, and you guys have seen it for years now through these trader bites and tweets and images and whatnot that I've posted. It's the same process that I've been following year in, year out, and my goal here with these trader bites is to transfer that to you somehow by just looking at it on a day-to-day basis. But that's where we are. We're in this low volume node. So the expectation is that OTF will be active, will likely be active on the open. And what that means is you're likely to see some big rotations on the open, two-way fight. So the most likely opening type this morning will be open auction out of range. I'm expecting it to be very turbulent, and I'm looking for responsive buying back towards yesterday's range. Back towards yesterday's range. That's what a normal auction would do, responsive buying. And if we don't see that, then it's sell, 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 and looking for 2006 and 1995. Wishful thinking probably, but 1995. Remember, it's a long weekend. It's a 3-day weekend nearing the end of the month. We may see some books balancing out today. We may see some squaring up a position. So we may see some selling since we've been in this big uptrend since the 1st of March. The 1st and the 3rd were the biggest days of the month, I believe. And so we have a pretty good chance that this is likely to rotate over and do its job to the downside. So the primary hypothesis is open out of range and then eventually make an attempt higher and fail lower. The second hypothesis is the opposite. Open in range, attempt lower, fight, come back, pull back, and then start working its way back to retest that 2026 single from below. And then the tertiary hypothesis is to open and give us an open drive back towards 2026, away from that low volume node on the composite and back towards the high volume node up here. That would be the tertiary. And then the fourth is an open test drive and then reversal down to 2006, and again 1995, same, with a strong push up, fake out, clear the books, balance the books, since we have overnight inventory being pretty extremely short right now. I do expect us to open up out of range in an open auction, push up to balance some of that inventory, and then start moving lower. So that's the plan. It is the last day of the week. I'm going to give you the same advice I give you for Fridays. Do not, I know there's probably going to be a fair amount of action where we've got a nice big gap here. Very important opening to watch. You might not want to miss this, but Please be patient. Let the market set up. Give it the first 15, 20, 30 minutes to set itself up and to give you a clear probabilistic edge before you jump in. Be selective about your trades. It is a normal trading day. You have all day. Be selective and really make those stops count, right? If they're going to take your money in a stop, make sure they take it with the highest probability stacked on your side, as opposed to just throwing yourself at the market. Good luck, and I'll catch you on Monday. Stage 5 traders, we have our AMA as usual at noon, and we'll start it out with a replay of a day that's selected by a member. Take care.